In this video, we're going to take a look at US stock markets to see what are the big levels to watch out for in the days ahead. Hello, I'm David Jones from Capital.com, and I thought we'd do a video on US stock markets because this week we've seen the start of earnings season in the USA. So when the latest quarterly results get released by all the major US companies. Plus, after some of the volatility that we saw at the beginning of the year, late January, early February, the US stock market index, the broader index, the S&P 500, has pushed up to what has been a big barrier in the past. So the question is, are we going to see it break through this time around? Let's take a look and catch up with the chart. So let's have a quick look at the S&P 500. So I think if we're looking at US stock markets, the S&P is probably the best one to look at. It's a broad US stock market index made up of 500 shares. The Dow is only 30 shares, so I think we get a much better handle on sentiment in US markets. And of course, it's the US markets that tend to lead the rest of the world. We had this burst of volatility that came in end of January, beginning of Feb this year, and we haven't seen fresh all-time highs since then. Let's just step this out. We can see, over the last few years, this has been markets that have just steadily punched out to new highs. But this shock that we had in January, has had, I think, a big impact on investor sentiment. But it's getting interesting again. I think the big level to watch for the rest of this week for the S&P 500 is these old highs from earlier in the year. So 12th of March, got as high as about 2803, 2805. We saw it again here in June, and we're up here again now. Earlier this week, it's traded as high as 2797. So it's really the whole 2800, 2805 zone is a really big one for this US index. And I think if we do see it broken, then the logical next target to watch for is a move back to these all-time highs from January, just before markets fell off a cliff. We'd seen it a little bit weaker today, but overall, we do still have our recovery going on from these lows back here in April. So I think it's going to be an interesting week. Of course, if you were bearish, if you were negative on US stock markets, if there's a level to think about going short, then we're here, because the market, after this big sell-off in Feb, has consistently run out of steam. So I think it's going to be the real line in the sand to watch this week, 2800 to 2805 on the S&P, to see if this time is it any different than the last 3 or 4 months, and we see this level cracked. So there we have it. I think the whole 2800, 2805 zone on the S&P has done such a good job of holding any sort of stronger recoveries back over recent months. It's going to be interesting to see whether this week, with the earnings data coming out, that's enough to break it this time around, or once again, are we going to see the sellers come back in? So it's a really big level to watch. And as I said, if we break through, then we can start thinking about possibly a return back to those all-time highs from earlier in the year. We'll start wrapping things up there. As usual, if you like the video, click on the thumbs up. We try and upload a video every day, so to never miss out, make sure you're subscribed to the channel by clicking subscribe, and if you click on the alarm bell notification, you get notified every time a new video gets uploaded. But for this week, from our quick catch up for the US stock market, from me, David Jones, and Capital.com, we'll leave it there, and I hope you have a good trading week.